Hello and welcome to everyone in the virtual classroom to learn case flow statement. Let us take one more question from Saurashtra University examination, that is March 2017 question paper, having at least one new point given in the question. Have a look on the question. Data has been given as usual. Balance sheets for a period of 2 years, one for the last year, another for the current year, and for 2012 we have to prepare the case flow statement. Then additional information, 6 points have been given, especially point number 2 is having something new that you have to face for the first time. I will be explaining that point in detail, but before that, let us start the case flow statement by deciding the profit of the year first. Have a look on the liability side. Profit and loss account. Last year 30,500, current year 30,600. So difference between the two balances of profit and loss appropriation account given in the balance sheet, By that way, we were deciding the net profit of the year. Let us do it once again. 30,600 minus 30,500, that gives the profit of the year under title A, cash flow generated from business operation or operating activities. Difference of balances of profit and loss appropriation account during period of two balance sheets. 30,600 balance of current year minus 30,500 balance of last year, that gives the profit of the year 100 rupees. So plus 100. Let us start. Additional information. Point number 1. Dividend of rupees 23,000 was paid during the year. This must be the interim dividend. Let us verify the balance sheet on the liability side. Nothing is there as far as any dividend is concerned. So this must be the interim dividend, because only interim dividend can be paid during the year. So let us give the posting impact in the concerned ledger accounts of interim dividend directly. Two journal entries would have been passed. Dividend is a distribution of profit, so profit and loss appropriation account debited to interim dividend account credited 23,000. Number of times we did it in so many previous questions, so you know it very well. Then payment. Interim dividend account debited to bank account credited 23,000. Account is over 23. Cash flow impact. Title came profit and loss on the credit side. It's a non-cash item, it's a non-operating item, and that is why will be and should be added back in the net profit of the current year under the first title. While on the debit side, title came bank, indicates payment cash outflow under title C, financing activities, minus 23,000. Let us do it. Title A first, add back 23,000, adjustments for non-cash and non-operating items, interim dividend plus 23,000. Then as a payment under title C, cash flow generated from financial activities, interim dividend paid minus 23,000. Second point, additional information. The new point of the question, as I told you earlier. I am reading the second point. The company has bought the assets of another company and the shares of rupees 50,000 were given in exchange. Company has bought the assets of another company and the shares of rupees 50,000 were given in exchange. The two assets that are purchased, namely stock, rupees 20,000 and machinery, rupees 25,000. So two assets have been purchased, and in lieu of the purchases of these two assets, company gave shares worth rupees 50,000. Let us prepare a working note. It is a new point of the question, and that is why a detailed working note is required. Have a look. Working notes. Number 1. Purchases of assets of another company. Let us decide the total purchase price. Two assets have been purchased, namely stock, rupees 20,000, machinery, rupees 25,000. That gives the total of these two assets which have been purchased, 45,000. Versus how much company has paid in exchange in lieu of these purchases. Purchase price paid in equity shares, 50,000. So two assets, the total of which is 45,000. To purchase these two assets, company paid equity shares worth rupees 50,000. It means company has paid an extra amount of rupees 5,000, and it is nothing but the goodwill that has been paid for this assets purchases of another company. Goodwill 5,000, an extra amount has been paid for these purchases of assets. Journal entries. Stock account debited rupees 20,000, machinery account debited rupees 25,000, goodwill account debited rupees 5,000 to that company's account credited from which these assets have been purchased, 50,000. Second J for the payment, that company's account debited rupees 50,000 to equity share capital account credited rupees 50,000. So these are the two journal entries for the purchases of assets from another company. Let us give the posting in the concerned ledger accounts related with this transaction. Have a look. Stock account. Opening balance 1 lakh, closing balance 74,000. First J. Stock account debited 20,000. Opposite narration, company's account purchases. Machinery account debited 25,000. Opposite narration, company's account purchases. Goodwill, no opening balance. Posting, goodwill account debited to company's account credited 5,000. To that company's account credited 50,000. Second journal entry that we passed. Company's account debited to equity share capital account credited 50,000. Have a look. This is the equity share capital account. Opening balance 2 lakhs, closing balance 2 lakh 50,000. Posting, company's account debited to equity share capital account credited 50,000. Account is over, 2 lakh 50,000, 2 lakh 50,000. Does this transaction affects the cash flow statement? Let us close the concerned ledger accounts before we decide that. Have a look on the stock account. Debit side looks bigger, 1,20,000. Put it on the credit side, 1,20,000. That gives a balancing figure of rupees 46,000 on the credit side. What it could be? It is the decreases of the stock that has been made in the current year. Open debit side total 120. Put it on the credit side. There is a closing balance of 74,000. It means in the current year stock has been decreased by rupees 46,000. This figure we will have to report in the cash flow statement at the time of reporting changes in current assets and current liabilities. So be careful. This is the figure of stock account that we will be reporting in the cash flow statement when we will start to report the changes in current assets and current liabilities. This 46,000, and you know the relationship of CA with cash flow. It is a negative relationship. Then goodwill account. It is also over. There is a closing balance of 5,000, 5,000, 5,000. Nothing is there that can affect the cash flow statement. Machinery account is still open because some other transactions are also there given in the question. But this purchases of 25,000 doesn't affect the cash flow क्योंकि इनके बदले में shares दिए हैं. So that is why it does not affect the cash flow statement. This transaction of purchases of assets from another company does not affect the cash flow statement. Why? Because in lieu of these purchases of these assets, company gave the equity shares of rupees 50,000. So it is a non-cash transaction, and that is why it does not affect the cash flow statement. Let us verify the equity share capital account. It is also over. 2,50,000, 2,50,000. So this was for transaction number 2, which was a new point of this question. Purchases of assets from another company. Let us verify the next transaction, the next additional point, number 3. The new machinery of rupees 8,000 was bought. A very simple one. Machinery account debited to bank account credited rupees 8,000. Let us give the posting in the machinery account. Machinery account debited 8,000 to bank account credited 8,000. Title came bank, indicates cash outflow. So under investing activities, minus 8,000. Let us report it. Cash flow generated from investment or investing activities, purchases of machinery, minus 8,000. Next point of additional information. Point number 4. The depreciation written off machinery rupees 12,000, land and building rupees 10,000. Two depreciations have been given. One on machinery, another on land and building, 12,000 and then 10,000 respectively. Let us give the posting in the concerned ledger accounts of machinery and land and building. It's a routine system of depreciation. So profit and loss account debited to machinery account credited 12,000. Then land and building account. This is the land and building account. Opening balance 2 lakhs, closing 190. Depreciation, profit and loss account debited to land and building account credited 10,000. Account is over 2 lakhs, 2 lakhs. No balancing figure. Depreciation is always a non-cash item. You know it very well, and that is why should be and will be added back in the current year's net profit under the first item. Let us add back depreciation on machinery 12,000, depreciation on land and building 10,000. Land and building account already closed. Machinery account is still open because one more transaction has been given related with machinery. So wait, let us verify next point of additional information. Point number 5. Tax provision of rupees 33,000 was made during the year. Current year's tax provision 33,000. Let us give the posting in the ledger account of income tax provision. This is the income tax provision account. Opening balance 30,000, closing balance 35,000. Current year's provision, profit and loss account debited to income tax provision account credited 33,000. make the total credit side looks bigger, 63,000. Put it on the debit side, 63,000, and that gives a balancing figure of rupees 28,000 on the debit side. What it could be? It must be the payment of tax that has been paid in the current year. And the journal entry would be income tax provision account debited to bank account credited 28,000. Cash flow impact. On the credit side, title profit and loss, current year's provision. It's a non-cash item, and that is why this 33,000 will be added back in the net profit of the year under title A. While tax payment, having a narration bank indicates cash outflow. As a separate and last item, it will be reported under title A. But as a separate and last item, जिनको हम कहते हैं normally pending list item. Let us report it. 33,000 as a non-cash item, income tax provision plus 33,000. Then payment. After deciding cash flow from operating activities, this would be the last reporting under title A, less income tax paid minus 28,000. Once again, additional information for the last item of the question. Point number 6, the loss of machinery sold rupees 200 was written off against general reserve. What does this mean? It means company has sold some machinery. The selling price has not been given. Neither the selling price nor the cost price has been given. But only the loss amount has been given, and the loss amount was rupees 200 was written off against the general reserve. It was not written off against profit and loss account, but it has been written off against the general reserve. We need selling price to report it in our cash flow statement under title B. So how to decide the selling price of this machinery which has been sold at a loss of rupees 200, and this loss has been written off to general reserve account. So how to decide the selling price of this machine which has been sold? Let us verify our machinery account. Number of items we already reported over there. Let us verify it once again. Opening balance 1,50,000, closing balance 1,69,000. We already reported this depreciation. We also reported purchases of machinery from another company 25,000. Then afterwards we reported another purchases made in the current year 8,000. Now let us close this account and decide the selling price. And see the loss rupees 200 which has been written off to general reserve. So the JE would be general reserve account debited 200 to machinery account credited 200, because the question is very clear. Additional point number 6 is very clear that loss has been written off to general reserve account. So GR account debited to machinery account credited. This is the general reserve account. Opening balance 50,000, closing balance 60,000, and the posting of this rupees 200, the loss due to sale of machinery which has been written off to GR account. So general reserve debit to machinery account credit, transfer of loss 200. Close this account. Debit side looks bigger, 60,200. Put it on the credit side, 60,200, and that gives a balancing figure of rupees 10,200 on the credit side. What it could be? It must be the current year's saving that has been made from the current year's profit. Profit and loss appropriation account debit to GR account credit 10,200. What would be the cash flow impact? Before we do that, let us verify the machinery account and find out the selling price of the machine which has been sold. So after this 200 which has been written off to GR account, Now what is the position of this machinery account? Total of debit side looks bigger, 1,83,000. Put it on the credit side, 1,83,000. Now we are getting a balancing figure of rupees 1800 on the credit side. All other entries got over, we already verified it. So balancing figure on the credit side 1800. What it could be? It must be the selling price of machinery which has been sold at a loss of rupees 200 and the loss amount was written off to GR account. It means the cost of this machine must be rupees 2000. That is why 200 loss took place and remaining is the selling price. तो अगर इनकी जेई पास करनी है तो बैंक अकाउंट डेबिटेड 1800, GR account debited, that is for the loss amount 200, to machinery account credited 2000. So original cost of this machine which has been sold must be rupees 2000 and the selling price rupees 1800 and the loss which was given in the point number 6 जो हमने पहले रिकॉर्ड कर लिया, GR debit to machinery account credit, and then afterwards we make the total of debit side, we put it on the credit side, and we got a balancing figure of rupees 1800 on the credit side, which must be the selling price of this machine which has been sold at a loss of rupees 200 and the loss was written off to GR account. So by this way we got the selling price of this machine which has been sold in the current year at a loss of rupees 200. I hope it would be very clear in your mind. Let us report the cash flow statement impact from the machinery account and GR account. Opening balance, closing balance. Purchases from another company does not affect the cash flow statement. Purchases of rupees 8000. We already reported it in the cash flow statement under title B. Depreciation also we reported under title A. Now this bank selling price 1800 indicates cash inflow under title B. Investing activities, sale of machinery plus 1800. Loss rupees 200 has been transferred to GR account as we already saw it. Let us verify the general reserve account. We already decided the balancing figure of rupees 10,200 on the credit side, current year's saving, profit and loss appropriation debit to GR account credit, current year's saving. It's a non-cash item and that is why should be and will be added back in the current year's profit once again under title A. Have a look. Transfer to GR plus 10,200. So this was for the additional information point number 6. Having loss of machinery transaction, selling price was not given but the loss amount was given, and on the base of that loss amount we posted that transaction and then afterwards we decided the selling price of machinery by closing the ledger account of machinery. Okay. Additional information points got over. Let us verify the balance sheet. Balance sheet reading. Come on the asset side. Land and building over. Machinery over. Stocks and debtors. Items of current asset. Weight. We will be reporting this after deciding cash profit from business operation. Cash and बैंक इनको हम लास्ट में वेरीफाई करते हैं, अभी नहीं. So wait. Goodwill already over. Come on the liability side. Share capital 2,50,000 already over. General reserve already over. Profit and loss account we already reported the profit of the year. Bank loan 70,000 versus nil. What does it mean? It means the bank loan which was there in the last year's balance sheet 70,000 has been repaid in the current year. So bank loan account debited to bank account credited. Company has repaid this amount to the bank from whom the loan was taken. So it indicates cash outflow under financing activities. Let us report it. Cash flow generated from financial activities after interim dividend repayment of bank loan minus 70,000. Once again balance it after bank loan. Next item, creditors. Item of current liabilities. Wait, we will report it with current assets, tax provision over. So this was the reading of the balance sheet. Let us make the total of cash profit generated from business operation. Total of this 5 adjustments for non-cash and non-operating items, 88,200 plus. Earlier the profit was 100. So now cash profit from business operation before changes in working capital or before changes in current assets and current liabilities plus 88,300. Let us give the reporting for the changes in current assets and current liabilities CA and CL. You know the relationship current assets with cash flow, negative relationship, current liabilities with cash flow, positive relationship. Let us do it. Stock and debtors. Let me remind you, the original balance of stock 1 lakh and then 74,000. But don't forget the transaction which was there as a point number 2 for the stock. तो हम स्टॉक अकाउंट में देखकर ये तय करना है कि अल्टीमेटली what is the picture in the stock account. So let us verify the stock account once again, though earlier I already explained you it, but once again, this is the position of stock account. Decrease is 46,000. This figure we have to report over there in the cash flow statement. So let us report it. 46,000. Negative relationship. You know, decrease is in CA, increase is the cash flow. So decrease is in CA, namely stock, increase is the cash flow plus 46,000. Then decrease is in CA, namely debtors, increase is the cash flow plus 15,800. Then creditors. Decrease is in CL creditors, decrease is the cash flow, positive relationship 14,800. Total of these three, net impact plus 47,000, and that gives the answer of cash flow from operating activities plus 1,35,300. So cash flow generated from operating activities plus 1,35,300. Less income tax paid, we already reported it, 28,000. That gives the final answer, net cash flow from operating activities A plus 1,07,300. B, cash flow generated from investing activities. Two items are there and the total net cash flow from investing activities B minus 6,200. Then C, two items are there, net cash flow from financing activities C minus 93,000. So we got the three figures A, B and C. Final picture of entire business A plus B plus C. What it indicates? Total net cash flow of entire business, or you may say increases or decreases in cash flow. How to decide it? A plus B plus C. That gives the answer plus 8,100. 8,100 plus A plus B plus C, that gives rupees 8,100. Let us add the opening balance of cash and bank. Let us verify the balance sheet for the opening balance of cash and bank. Have a look, it is there. Cash balance 500, no opening bank balance. So only cash balance that we have to report, we have to add over there in the cash flow statement. In the final picture of 8,100, Add opening balance of cash and bank. Only cash balance was given plus 500. That gives the closing balance of cash and bank 8600, or you may say 8600. Let us verify the balance sheet for the closing balance. Asset side, have a look. Cash 600, then bank 8000. 600 was the cash balance and 8000 was the bank balance. The total of these two, 8600. Let us verify our final answer in our cash flow statement. Is it 8600 or not? Yes, it is also 8600. Closing balance of cash and bank, 600 is the cash balance, 8000 was the bank balance, and total 8600 closing balance of cash and bank. So this was the process to reach at the final answer of closing balance of cash and bank. This was a question from Saurashtra University examination March 2017 question paper. Two new points were given. One was purchases of assets from another company, point number 2, additional information, point number 2. And then in point number 6, selling price of machinery was not given and the loss amount was given. And on the basis of that loss amount, we decided the selling price of machinery, which was also a new point of this question. I hope each and everything would be very clear in your mind. Thank you. Thank you very much.